This is the VSA 5 Minute Morning Miner, and I, David Scriven, are with Paul Rankin. Paul, how are you today?
I'm very fine, thank you. Very fine.
Forgot to mention it's Wednesday, the 22nd of January.
It is indeed, yes.
So, therefore, we shall focus on news for that day. And maybe we'll kick off with BHP Group and improvements at Escondida.
Yes, that's right. They released Tuesday production results there yesterday. And one of the improvements they talked about was the recorded 17% jump in copper production there at Escondida to 510,700 tons. They also did a little bit better on a quarterly basis in the iron ore front in West Australia with roughly 500,000 tons more than last quarter produced at 73.1 million tons. They maintained their guidance also for West Australia operations somewhere between 285 to 95 million tons, but they do expect it'll be at the top or upper end of that. And the net debt balance here at the end of the financial year 25, they think will be about $15 billion or so.
So, there was some discussion of richer ore quality. How did that come about, do you think?
It's probably part of the mine sequencing as far as the resources and reserves in the pit is concerned. I don't suspect that, given the size of Escondida, it would have been something that hadn't already been known about by the engineering staff, but simply it's a question of when it's planned to be mined.
Very good. Perhaps we can move on, therefore, to sovereign metals and their rutile and graphite projects in Malawi. And if you could give us an update on this optimized pre feasibility study.
Yes, that's right. This is for the combined rutile and graphite, the Kasaya project, world's largest independent rutile dry mining project out there in Malawi. The updated PFS came up with some significant differences from the prior study. First of all, it has a small fall in the annual graphite production uh, in the newest work here, as well as just over 10% stage one capex increase to about $665 million. But as much as anything, that represents some front loading of costs into the first stage of plant development as opposed to later on in the mining sequence for life of mine. Total capex we're reporting now at $1.13 billion for the operation, with as I say, 665 million as stage one. Operating costs they expect here to be about 5% higher now than the prior PFS estimate at $423 per ton of rutile concentrate. And as a result of these numbers, the pre-tax IRR falls about 5 basis points to 27%. The they had pre-tested both dry mining and wet slurry mining for the operation, and the PFS has decided to go with a fully dry mining operation using leased equipment, but they being as owner operator. Initial plant in the mine development now being planned for in the south of the deposit to extract 12 million tons per annum of ore. And then a second plant would be built and added in the north end of the deposit, several kilometers away to the north from year five of operations.
Very good. Maybe we will therefore move on to, and thank you for that, to Ariana Resources. And they released 2024 production results today, apropos the Zenit mining operations. If you could kindly elaborate on that.
Yes, that's right. It looks like pretty steady state numbers that they had come back for 2024 for the operations there in Turkey. Even so, we have seen quite a bit of price erosion in the shares of Ariana over the last couple of months, too. But these numbers themselves don't essentially justify that. Zenit's production came in at just shy of 21,000 ounces, which was better than full year guidance for they had given previously at 20,000 ounces. And the Kizil or Arzu South pit at Kiziltepe is due to recommence production shortly, and that's based on sequencing as they got the second operation satellite deposit of Tav Shan operating the leach operation about 30 kilometers away. Gross revenue for the year came in at $54.7 million on an average realized price on gold at US $2,621 an ounce. And as a result, up to the end of 2024, the Kiziltepe mine has produced 172,000 ounces, which is 70,000 ounces more than the additional life of mine when they made the decision to develop the operation about in the middle of the last decade and began production in 2017. So it's been a highly successful project for a junior getting itself into production for the first time back then.
Perhaps we might draw things to a close unless you'd like to add anything further. And just before I invite Paul to comment there, I'm sure it hasn't escaped your notice that the gold price has been quite strong, and hopefully it's going to test its October high and move through that 2790 figure.
Yes, it is looking somewhat stronger, and part of the reason for that is a weaker U.S. dollar price here on Tuesday, as some of the first executive order actions were taken by the Trump administration.
Very good. We'll draw it to a close, and thank you very much.
Very good.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.